Like I was just some time back, I was looking at Trent. So from 2002, 3 to 2007, 8, it went up 10 times. But it was not the greatest stock during that time because we had Voltas going up 60 times and all the engineering stocks going up 60, 70 times. Now, 2007 to 2010, it again grew by about 50%. But from 2010 to 2016, it did not go anywhere. It gave a return of CAGR of, if I'm not mistaken, about 8-9%, which was significantly lower than the market. So you have to, so in any business, there is a, if you see, there is a life cycle. So initially, it's initial phase like a startup. Then there is a growth phase. Then people start realizing that, oh, this business is likely to do well. Money starts pouring in case they don't want money. But as long as the business keeps innovating, I think the growth will continue. But of course, it's life cycle. So at a time, it will sort of mature and start delivering big cash flows but low growth. And then, like most of the FMCG companies, that's what has happened, that they are delivering large cash flows but less growth. And then for now, that phase can continue for a long period of time, and after that, it's a demise. So I think that is what happens for each business. So nothing different. So ideally, you should be invested when the growth phase is there and continue to hold till you think that the business is mature.
Okay. Which are those companies which are in the youth?
So I still believe that someone like a Trent and dmart are in the youth, and they have still a long way. Yes, they are.
Okay.
And the reason is that, you know,
you're using the word youth for Trent and dmart.
Yes, because there are two things. For simple reason that take for example Trent, they keep innovating. Now, for example, they are pushing for beauty products. Now, the issue is that initially when I invested in Trent, one of the thoughts which was in my mind was that Simon Tata, who created Lakme, the only brand probably in India which was extremely successful, and till you came to know that it was an Indian brand, you would not have believed it's an Indian brand. And they are again getting into beauty. LGDs, second, again something completely new, but clear focus on that. I mean, they have just started, but it will take a long time. But so these are the type of, so as long as the company keeps innovating itself, limiting itself to the structure in which it conducts business, I think those type of companies will do well.
My next question is perhaps centered around a stock which you've owned and which I think you've sold. That is Trent. And that's where Titan.
Titan, yes.
You've owned Titan for about 20 years.
That's correct.
And now the big picture, which is the mega trend according to you, is changing.
Yeah.
Just if I may just encourage you to elaborate more.
Okay. So one of the reasons why we sold Titan was that we saw lab-grown diamonds coming in. About 30% of Titan's business comes from lab diamonds. The second is that the management in a couple of calls also stated that they have realized that they are facing a lot of competition because of the high making charges which they have. And they said that to remain competitive over a period, we are likely to moderate our making charges. When it comes to lab-grown diamond, our thought is that over a period, it will make diamond jewelry a commodity. And because of that, a significant portion, which was a high margin portion from whether it's Titan or any other jewelry manufacturer, is likely to come down. Though most of them continue to believe that natural diamonds, the lure for natural diamonds won't go away. I think betting against technology is extremely difficult. I don't know whether I said this last time, but a lab-grown diamond is like an IVF baby. So whether it's a real baby or an IVF baby, it's the same thing. There is zero difference between the two. And if that is the case, why would anyone go for a natural diamond? As long as people at the lower strata of the society don't start wearing lab-grown diamond jewelry, I think it will work. But minute they start wearing, that uniqueness of it will go away, or the snobbishness of that will go away, and because of that, there will be a significant fall in natural diamond jewelry. That's what we believe.
Is the natural diamond prices down? I mean, are thoughts adding up with what?
They are. They also say, I mean, when you talk to a person who is into natural diamond jewelry, he also says, but the artificial diamond prices are also down, and you have no guarantee that they won't go down further. So I said, I agree on that. But the issue is that at a price, maybe if a natural diamond costs, say, 1 lakh rupees or 2 lakh rupees per carat. And if this is costing maybe 20,000 rupees and then it comes down to 5,000 rupees, what you are losing in only 10,000 rupees. Whereas there you will be losing significantly more.
So when you sold Titan, what did you buy against it?
I don't remember, but we have bought a water company.
Okay.
But so part of it went into that company because water, I think, is a significant growth industry as of now. Water in the sense water treatment.
So there is definitely a different thought which Mr. Noel Tata will bring on table, understanding that he incubated Trent. He's been involved with a lot of consumer businesses of Tata. Could that get a fillip according to you?
So I think the Tatas are very fortunate. In the sense that when industries were doing very well, overall, industrial segment, they had got Ratan Tata to at the helm. And when I think consumer businesses are likely to do very well, they have Noel Tata at them.
If you like this video, then like, share and subscribe to ET Now.